somebody do me a favor and check to see if I did that right? Cause usually I schedule it for later. I ain't never try to do it right then. Somebody look at YouTube and let me
I'm
know here.
looking at it.
Okay, it's
It's
good.
coming on.
Okay,
It
all right.
says stream is starting
Yeah,
soon.
stream is start. Okay, all right. Yeah, all right. So that's right. Okay, just wanted to make sure that was right. Okay. No camera. I'm not gonna do a camera. I'm just going to the desktop. All right, yeah. Everything look like it's cooking with Crisco. Okay. Now, um, we have gone through the chart prep, and I was about to start talking about um, once you look at the charts, signatures that I watch for. Okay, so signatures that I watch for, we were just talked about. Right, this is a 4 hour chart. Price is fractal. We talk about price is fractal, and it don't matter what time frame you're looking at. You want to look for like the signatures. Okay, so as we see, right, as we see in our higher time frame, right, what are we in our higher time frame? Where are we? Right, somebody tell me where we are on the higher time frame. Don't act like y'all can't talk, cause I done put it on YouTube now. We still talking now.
Are we in our buy market making buyers market?
Yes, market makers buy model, right? We're in a market maker buy model, right? So if we're in a market maker buy model, what's the bias on the higher time? If we're on the right side of a market maker buy model, what's the higher time frame bias?
Bullish.
Bullish, right? Bullish, right? So our higher time frame bias is bullish because we're in a market maker buy model and we're on the right side of that buy model. Since we're on the right side of that buy model, right? If we're going to trade with the higher time frame, we should be looking to do what? Go long or go short?
Go long.
Go long, right? We should be looking to go long because the higher time frame is bullish, and if we want to trade with the higher time frame, we want to be looking to go long, right? We want to look to go long, and we're looking to go long because those are going to be the trades that give us the opportunity to um, hold them longer if we get in at the right times when the algorithm is presenting the opportunities based off the time frame we're trading. Okay, so now that we got all that settled, when we're watching price, or should I say when I'm watching price, okay, now that we know where we know we are in a market maker buy model. Now that we got the chart squeezed up here, right? So when we got this chart squeezed up here, right? Looking at this right here, it looks like we have completed a market maker buy model and we could be getting ready to go into a sell model, right? So if it looks like we've completed this market maker buy model and going to a sell model, then we could get trapped into trying to hold to come down for these lows when the market really doesn't want to go there, right? Can the market go there? Yes, it can, right? But we would need the market to show us that first before we try to start targeting those lows, right? And what type of things do you look for to help you stay on the right side, right? First, start out by looking at where we are on the higher time frame, right? So on the higher time frame, we're in a market maker buy model. Okay, knowing that on the higher time frame we're in a market maker buy model and we are looking for opportunities to buy. Okay, as we talked about here, let's go back and let's do this again. Right, when price right was here, okay, when price was here, we said that we came up and we set relative equal highs here. Okay, we came up and we set relative equal highs here. Let me get this junk out of the way. Move junk. Right, let's turn off our TDA for a second because we just talking here. Put you in there. Right, turn off our TDA. Oh, I got doggy Tim. Okay, what is this line here? Oh, I don't need that one. Okay, so on our zoomed in version, we know we're in a market maker buy model on the higher time frame, right? Looking at our lower time frame, this is a 4-hour time frame. For those that's wondering, we said that we came here, right? Price, right? We said price came up, consolidated, pushed up, right? And created relative equal highs, and then it created, while it was accumulating positions, it created relative equal lows. Okay, so we got relative. Can y'all see those lines? Okay, let me thicken them up. I know I said I was gonna start thickening these lines up for y'all.
Looks good.
Yeah, some people be on small. Everybody ain't got a 40-inch TV to watch it on, Deborah. Some people be watching it on their phone. Everybody ain't blessed and highly favored. So we came in, we made relative equal highs, relative equal lows, right? And we decided that based off of these relative equal lows and these relative equal highs, we asked the question, which one has the biggest pool of liquidity resting below it, right? The decision was this right here had the biggest pool of liquidity, right? Had more buy stops there than we had sell stops under here, right? And why is that? And that's because y'all hold on for a second. You got out the shower too quick. I'm all on the YouTube. I'm on the YouTube with it now. You ain't you. No, you wasn't. I done muted. Oh, wait a minute now. I ain't muted on. I don't think I'm muted on YouTube. I was muted. I was muted in the Discord, but I wasn't muted on YouTube. I was about to say something crazy. Everybody on YouTube got all your business, Myra, Mama Shirley. Hey, yeah, I'm in the middle of YouTube now. Y'all got. I thought you were gonna be gone for a while. That is a long time. Look. No, it wasn't. You somebody, I don't know if it's a skit, baby. That wasn't no skit, honey. She wanted to put a pause on that. Oh yeah. I'm back. I'm about to get back on my YouTube now. Love y'all. Oh, your hair look good, sugar. I was tired of seeing them Bantu knots. All right. Love you. Yeah. I'm back, y'all. So we said that it was more stops resting above here, and that was because of time. Oh, that's my son. Hold on. He getting his hair done. Man, they don't want us to do this live stream. They don't want us to do this live stream. Oh, yeah, that's clean right there. That's clean. I like that. Okay. That's clean right there. Okay. All right, y'all. More buy stops up here than sell stops. What is the reason? Because of that, plain and simple, time, right? Time, right? We created this high, right, back here. We did all of this right here, right, and we came up and created a relative equal high, right? It's high probability because this high is lower than that high, right? But it's more time in between these two than it is between these two, right? So there's more liquidity resting here than it is there, right? Why is that? Because anybody that got short there, their stops is there. They got short there, their stops is there. They got short there, their stops is there, right? It's building liquidity, right? And anybody that got long here, their stops is there, right? Or anybody that might have trailed when we made that relative equal high, their stops is there, right? So we got that. We're coming up, and as we come up, right, as we come up and keep breaking highs, people will continue to trail their stops up, okay? But at the end of the day, it's still more stops here because it's been more time and the price has done more and given more opportunity for stops to be up there. Now, in the meantime, you still have stops being trailed as price continues to go down, right? So when we take these stops there, right, and we don't continue down and we come up and we take these stops there, right, we're continuing to take stops and not reversing. So it's showing that price still wants to go up, right? Now, remember that piece there, right? We're taking the trend line liquidity and we're not reversing. So price is still showing that it wants to go up, right? So that's a key that's a key thing here of what we're about to say, right? So whenever you can be bullish or bearish, whatever your bias is, and you see the market starting to accumulate, right? Engineer liquidity. We're sitting up here engineering liquidity. We're rolling up into a ball. When the market breaks out, right, we don't want to chase it, right? We want price to show us what it wants to do, right? If you are bullish, right, what is the preferred method of getting your entry? Do you want to get in on the curd, or do you want to get in on, right, the curd? The curd. Do you want to get in on the curd or the curd? Which one do you want to get on? Right? If you bullish or bearish, right? Which one do you want to, the preferred method of delivery, which one do you want to participate in? Speak to me.
The double R.
The double R. You want to see the double R. This is the high probability, best risk to reward, best scenario. All stars have aligned. I'm happy to see this. And why is that? That lets you participate in the power of three: the accumulation, manipulation, and distribution. Everything is based on the power of three, right? That gives you an opportunity to get aligned with smart money and buy below lows and sell above highs if you can catch it at the right time. But even if you don't catch it at the right time, it's still, as long as you got your narrative, it gives you an opportunity to participate until terminus is hit. You're not scared to get in later if the market gives you a second opportunity. Y'all remember the other day when I said, hey, I wanted to get long right here, but price didn't come back. So I waited for price to show me this. And once price did this, then I participated and I got long. So instead of getting like 120 points, or instead of getting 90 points or whatever it would have been, I end up getting 40 points, right? But I still was able to participate because the market didn't give me an entry where I wanted it, right? I still had the understanding of where it was going to go. Now, in between, and I know you're saying, Tim, get to it. I can't just get to it because there's so many things you got to keep in mind when you're watching this is all the stuff you got to keep in your head. Okay, so if you want to see the the curd if you want to see the curd, let's put this over here. All right. If you want to see the curd, right? If the market breaks out, right? Like that, you don't chase it. Right? You don't chase it. And why do you not chase it? Right? You don't chase it because you're anticipating this right here, right? You're anticipating, and this goes along with what Michael has been really hammering home on the 2024 model, right? I mean, the 2024 mentorship. Are you always going to get this? No, you're not. Sometimes you're just going to get this right here, right? But this is where the great ones live, right? Let me go ahead and put this up. Let me put this all the way out there. Take this off. Right. Okay, so put it all the way to the end. So now here, when we can't, like the other night, and this ain't no shot at nobody, but I was in the Discord of the other community that I'm in, and some of the guys was in there. They was talking. They was big geeked about price ripping low. Oh, we definitely selling. We definitely selling. We definitely selling. Right? We definitely we gonna drop. We gonna drop. We gonna drop. Right? And I was waiting for my opportunity to buy. It was like during the Asian. I'm waiting on my chance to buy. Right? I wasn't getting geeked at this drop coming down here. I'm waiting on my chance to buy. They like, oh yeah, I got some sell side down there. I got some set, and I'm like, I ain't say nothing, right? I ain't say nothing because I ain't trying to, be the one to, come rain on nobody parade or try to sway nobody. You know what I'm saying? Because there's opportunities, and I don't know how. I don't know if they just shorten. I don't know if they scalping or what. But I ain't trying to rain on nobody parade. But I will tell you that I bought, and I was profitable. They sold, and they was profitable. But I wasn't looking to sell. I was looking to buy because I'm in the mind frame of the higher time frame that we looked at, right? So now, back to what I was saying. Price breaks out. What a signature that I look for, right? And if somebody, how long we been on here? 18. Okay, so if somebody, what I'm saying, like to go make notes and put comments in there, y'all can say skip to round by 19 minutes. That's when Tim start talking about the good stuff. Okay, so whenever price, right? If I'm bullish or bearish, whenever price attacks the liquidity in the direction that I want to go, right? So in this case, I'm bullish. When price attacks the buy side, right? I don't care if it hit it and wick off of it, hit it and trade through it, like this right here. I don't care. When it attacks this, what I want to see is, right? Let's see something real quick. Right? Let's see something real quick. Remember the other day? Do y'all remember the other day when I said, right? When we have like sell side and buy side, right? And we what did price do right here, right? On this candle right here, what did price do right there? Somebody tell me. This candle, don't worry about none of this over here. This candle right here, what did price do right there when it traded above that high? Speak to me.
It put people in long
It put
and it
people
took
in
stock.
long and it took people out, right? So
Right.
it took out people, right? That was in there on a short, right? And it put people in that was wanting to get in on a breakout long, right? Where did they stops go? When they got put in on a breakout long right there, where did they stops go? Speak to me.
Probably below the low.
Yep. They stops went right here, right? Below our relative equal lows,
Yeah.
right? If they didn't have a big stop, it would be there, right? So below any lows that's down here, preferably the relative equal lows, right? Right here at the order block, that would be the preferred low, right? That we as smart money would want to attack. You see what I'm saying? Okay. So right there, price engaged the buy side. We are bullish, right? We bullish. Why are we bullish? Because the higher time frame is bullish and we're in a market maker buy model. We're over here at what could be a second stage of reaccumulation. Maybe. Let's squeeze it up. Yep. Maybe even a third, depending on how you're looking at it, right? Of reaccumulation, right? We're right here coming up to that. So we could probably accumulate there again before taking out that high. Okay, so we're in some stage of reaccumulation. Okay, so we're looking bullish. Now, as smart money, right? Thinking as smart money, right? If you know as smart money, traders got put into the market here long and the safe stop is here, right? The more risky stop is there. As smart money, what do you want to do if you're bullish? Where do you want to buy? Right? Where do you want to buy? And it's not in the discount. It's in the discount, but that ain't the answer I'm looking for. If you're smart money, right? Hear what I'm saying? If you are smart money, if you are the algorithm, where do you want to buy?
Um, at or below the opening.
A little bit lower than that. Smart money wants, like we want, participating with smart money, we want to buy at or below the opening price. But smart money buys where?
Where
Below
dumb money is?
below the stops.
Below the lows.
Okay.
Smart money buys below the lows. Right? So if you know that here people are being forced in and their stops, their safe stop is here and their more aggressive stop is there, you want to see smart money attack their stops, right? That lets you know, or that strengthens your thesis of I'm on the right side. Smart money engineered liquidity and then immediately punished them, took them out. Look how quick we dropped below this one. Immediately took them out and give them no chance, right? And give them no chance at all. Now, these people down here shaking in their boots, but this right here gave them a little sigh of relief, right? And then they said, nah, boy, I got you too, right? And then just to add insult to injury, right? Anybody who had their stops here or there and saw all this get taken out and saw that little wick right there, They was like, oh, y'all, and it started going up here. Then they moved their stops there. Smart one said, "You too, boy. You too, boy. Give me that." You know what I'm saying? And so when I was in the Discord and everybody was so excited about price dropping down here, right? I was waiting for the YouTube boys down here. YouTube boy, right here. YouTube boy, give me that. And now we pushed up and we create the imbalance, right? And it give an opportunity to look for the long right here. Give you the opportunity to look for the long, right? So now, right, this is like the higher time frame you look at. So now you
Hey,
want
Tim,
to, yes.
I ain't got no sound. Your
You say you,
sound went out.
my sound went out well on YouTube. Check, check, check. In the Discord,
I hear you. I hear you.
Lord, that might be your phone.
No, it came back. It just came back. Seeing you say that might be my phone.
Oh yeah, that was your phone. That's the iPhone 3. So, right now you got opportunity to get long here, right? And then you want to see from this point on, right? From this point on, you want to see price stay strong. You know what I'm saying? You want to see price stay strong after getting in there, right? So, and this is up to the real time now, right? So, looking at, let's go back and look at just the signature without all the extra commentary, right? The signature is we're bullish, right? We come up, we create relative equal highs, we come down, right? We create relative equal lows, right? And we still accumulating, right? We blast off with displacement here, right? We got displacement. Got one fair value gaps. We got two fair value gaps, right? And then we immediately attack these stops, right? We immediately attack those stops, right? That's what you want to see, right? Engineer the liquidity, take the liquidity, and then start to give an opportunity to get in, right? That's the signature you're looking for. Now, Tim, we got the signature, right? Let's say I participated here and I took advantage of this move during this day, right? And now I'm already out, or I missed this move, and how do I participate in there? Look for your signatures, right? Let's go over here and do this together. Okay, let's do this together. Okay, when price came here and said YouTube boy, right? YouTube boy, give me that. I want that, right? Now we see here, right? Price came down, set relative equal lows right there, right? Then price up here. Right. We got our relative equal highs there, right? So we've come down, right? We did the YouTube boy. We pushed up here, right? And we got that fair value gap there. Now, this is where class participation time come in right here, right? Working from the bottom, right? Whenever we're looking at price, working from the bottom, right? When we did the raid on the stops over here, right? When price came back up, right? Work from the bottom up, give me the signatures, right? Give me the signatures in price that give me the signatures that price has been laying out for us. Ready to go. Ready to go. Somebody give me one. This move right here. Give me the signatures that price has been laying out for us. Deborah been doing a lot of talking. Somebody else need to run your mouth now. Don't be scared. We talk about it every time we get together. We talk about the same thing.
Expansion?
Expansion, but give me some other stuff. Did we know this is some type of expansion, right? But give me the key points, the key price points. I don't want to hear like verbiage. Give me the key price points, right? Right. Anybody? Anybody? Okay, on expansion right there, right? What is expansion tied to? What is expansion linked with?
Order blocks.
It's linked with order blocks. What does an order block give you? It starts with a C.
Consolidation or
What does the order block give you? Consolidation is linked to what?
Equilibrium.
equilibrium. That's
Okay.
right. That's right.
So if expansion is linked to an order block, right? What's the most significant price of an order block? There you go, Kashaya. Kashaya typed it in the chat over there.
Oh, confluence.
No? Where you see confluence at?
Here to learn and share. Oh, consequent encroachment.
No, inside the chat of the Discord.
Oh, okay. I'm looking at the wrong chat. Sorry.
Changing state of delivery.
Change in the state of delivery. Right? It gives us our change in the state of delivery. Okay? So, whenever we got an order block, right? That order block is going to give you the change in the state of delivery, right? So, for this entire drop down there, what are we doing, right? We're selling off, right? We're selling off. So, where is the change in state of delivery for this entire drop right here? Right? Coming from there to there. Where's the change in the state of delivery? Well, let's do it like this. From here to there. Right? Where's the change in the state of delivery? Make it easier for you. Top line or bottom line? Or let me do it like this. Blue line or orange line is the change in state of delivery for this run right here. From there to there.
Orange.
Orange line. Very good. Orange line. Do everybody understand why that is?
No.
You say no?
Yes.
Okay.
No.
All right. So from this high to that low right there, right? Price was selling off, right? This is one price leg right there. Price is selling off from that high to that low. So with this price leg right here, the overall delivery was primarily to the sell side delivery, right? Once price trades back above these continuous down close candles right there, when it trades back above that opening price, that is the change in state of delivery for this price run right here, because it was bearish. And when we trade back above the last consecutive down close candles and you're bullish, and you're bullish, that's the most important part. You got to have the narrative. You got to have the bias of being bullish, because you can trade above a down closed candle and it not mean nothing. It's got to be bullish. So we are bullish and we come down, right? We come down here and we take out liquidity, right? We come there and we take out liquidity after tricking people into the market, right? We trick people into the market on a breakout and then took their stops, right? So this is your narrative. Trick them in, take their stops, right? Bait other people in here by like rejecting up, then come back and take their stops and then take off, right? That's your change in state of delivery right there, right? So this move here, right? That move there, that's your change in state of delivery for this entire move. Now, embedded inside there, right? Embedded inside there, we have a secondary change in state of delivery here, right? Right, this is like embedded. It's embedded, right? Because we came down here and then we traded back up above that right there, right? That gives us an order block right there. Where is this order block residing? Right? Where is this order block residing right here? It's inside what?
Inside the other order blocks.
Yes.
Order block.
Yes. This order block is inside this order block, and price rallied away from it. So we're anticipating this order block to act as a propulsion block, right? Since we're anticipating this to act as a propulsion block, then we're looking at that right there as a change in the state of delivery also. And price may want to refer back to that, right? It may want to refer back to this order block right here, right? Why? Because we have a fair value gap here, right? And how far below this fair value gap can we go, right? We have a order block sitting right there, right? So if we trade down into this fair value gap, how far can we possibly go to that order block, right? What's important about that order block? This 20,337 even, right? That's the change in state of delivery, right? So if you're looking, what price can I buy? 20,337 even, right? Put your stop there. What price can I buy? 20,391.75. Put your stop there, right? Okay, so that's why that's your change in the state of delivery. That's your change in state of delivery for the overall move, right? This is your change in the state of delivery there, okay? Because this is when we took the liquidity and then we blast off there, right? So here's your order block there, and there's your propulsion block there, right? It's giving you the signatures, right? We got the order block, and then this order block blast off, pushing price above it. Now that we have our change in state of delivery, we got our propulsion block, right? We got our BISI, we got our breaker, right? We got all these PD arrays here, right? We got all these PD arrays here. Now, what?
Can you explain why the blue one is a propulsion block? I thought when it's within the range of the original order block, it's still considered like one. Like price has to move away from it first for it to be a propulsion block.
Because right now, in this case right here, right? In this case right here, right? If you look here, like this, right? We're right here, we're consolidating, right? We're consolidating right here. right? And then whenever we consolidate and we move away from the consolidation, where's your order block, right? Your order block is the last down, up, down close or consecutive down close candles at or near equilibrium, right? This is equilibrium, right? These are your last series of down close candles at or near equilibrium. That's your order block in the sense of that, because remember, it's multiple ways to find an order block, right? Now, what's the other way to find an order block, right? When price comes to an area, right, of anticipated support, right, and is met with heavy contrarian distribution, right, meaning we came below a low and we distributed long positions here and price rallied, right? So we came at an area of anticipated support below this low and distributed long positions and forced price back up, right? When you trade back above the opening price of the down close candles in that leg, the last down close or series down close candles that came into that area and was met with that distribution, that's your order block right there. So you have an order block here based off the entire move, right? And then a propulsion block is an order block that's inside or trades to another order block and then propels price away. You understand what I'm
So
saying?
it could be like the original or the first one, right?
Huh?
Um, the second, like the blue line order block,
Yes.
if it's within the original order block, the orange one, that can
Yes.
still make it. It can still be considered a propulsion block.
Yes. So it like
I thought it was
with
moves away.
no, when I like to see it when it trades up, and like if this was here, that's the way I like to see the propulsion block. I like to see it like that. I like to see it like if these two candles were sitting right there, right? That's the way I like to see it. Just like how this fair value gap is right there at the breaker. I like to see my fair value gap right at the breaker. I don't like to see my fair value gap down here where I got to trade down past the breaker and then go up, right? Because I got to dig too far in. And you see here with the propulsion block down here, you see how far down into this order block we had to dig to get down to that. I don't like to, you know what I'm saying? Because I'm trying to get in as soon as I can. Like I'm trying to get in right there on this order block. And I don't want to have to wait for it to dig down there. And then I don't want to wait down here at this order block and for it to possibly not get there and then run off and leave me. Now I got to look for a less favorable entry. That's why I say I like to see it like where the propulsion block would be sitting here, where it just trades back down into this order block here and then price runs, right? So it's the same concept where it's in, as long as it's the order block inside the order block, right? And then you see price rally away from it like that. That's your propulsion block. Because it's
So
propelling the price.
if we seen or disregarded the blue order block and we only were looking at the orange one, like we're not wrong, but it's good to note that there's an order block within it, so price can go down there.
Yeah, you're not wrong. That's what I'm saying. You always got to account for what's below you, right? So you're not wrong for looking at this order block, right? You're not wrong for getting in, because when it comes to the order block, right, your mandatory stop is below mean threshold, right? So mean threshold would be below, if we come here, right? So put it on the order block, right? Your mandatory stop is below mean threshold, right? That's your mandatory stop. Your safe stop is below the low of the order block. So in this case, either place you put your stop loss, you would have been safe on this pullback right here, right? And then if you was like, if price never made it to this order block and you was waiting on this and price stopped there, we never got this little dip right there, price just stopped right there, you wouldn't have got picked up here, right? But since price came down, it don't matter which one you were sitting at, you would have got picked up, right? But whenever you see a order block that's you know what I'm saying, within an order block. It can be inside or it can just trade back to it. But then when you see price rally off of it like that right there, that's your propulsion block, because it's a propulsion block is just an order block that trades to or is inside another order block and propels price away. You know what I'm saying? And then with the propulsion block, you really don't want to see mean threshold being violated, right? You really don't want to see mean threshold being violated with a body, right? Because it's showing you that price really wants to go. So to come back down and lay a body over mean threshold, that's not indicative of a propulsion block. Just like with like an immediate rebound, you want to see price moving away. You don't want to see price just hanging around, then going, right? It's like that's just the signature you're looking for.
Okay. And in this case, with the blue one, you might have gotten picked up because where you have that blue line, couldn't you have put it at the wick since it overlaps with the fair value gap?
You talk about here?
To the right of it? Yeah.
You talk about right here?
Yeah.
Oh yeah,
That's the entire.
you talk about put. Oh no. The change in state of delivery is always going to be the opening price.
Oh, that's what you're highlighting. Okay.
Yeah, I'm highlighting the change in state of delivery.
Okay.
Yes. So this is just, and that's what I was saying. This right here, this is just a change in the state of delivery for this move right here. You see what I'm saying? Just that move right there. And that's what I was talking about before when I was like, there are a million changes in state of delivery with price, right? Every time a green candle trades above the opening price of a red candle, or a up close candle trades above the opening price of a down close candle, or a down close candle trades below the opening price of a up close candle, that's a change in the state of delivery. But is it a ICT change in the state of delivery? You see what I'm saying? That's what I be trying to hammer home for everybody. That's why I said, which one is the change in the state of delivery for this overall move, right? And for the overall move, that's the change in the state of delivery, because that's when this move right here went from being bearish to bullish once we traded back above this order block right here, right? But inside this area here, right, we were going bearish, and once we traded back above these candles here, excuse me, that right there is another change in the state of delivery that you can use in conjunction with this, because now you understand where you're going. You see what I'm saying? So it's like, you don't always want to go find every little move and be like, oh, that's changed state of delivery. Oh, that's changed state of delivery. Oh, that, because it is a change in state of delivery, but is that something you want to be trying to trade off of? You understand what I'm saying?
Thank you.
Okay. And so, and now we got that there. Okay. So once we got these key points here, we got our order block, got our change in state of delivery, right? We got our bullish fair value gap, right? What are you looking for? Right? What are you looking for these key levels to act as? Since we got our change in the state of delivery, getting our change to state of delivery means that we have switched to what? What kind of program? All right, we were coming here.
Buy.
Yes, we've switched to a buy program now. And when you're in a buy program, what signatures are you looking for what are you looking for these key price points to act as? Right? First of all, let's get all our key price points, right? We got 20,391.75. That's our change in state delivery, right? We got 20,337 even. That's our opening price of our propulsion block. Another, type of change in state delivery. Okay. What else we got? What's another key price point that we have here? Right. What's another key price point we have here? Huh? Listening? Listening?
The BISI that you're highlighting?
What's the price? What's the key price?
2372.25.
Yes. Yep. That's another key price. And what is that?
Consequent encroachment of that
Yes. Consequent encroachment of that BISI. Right?
this year.
Right. For those who don't use those. Right. What's another key price point?
Breaker.
Yep. What's the price?
2352.25.
Yes. What is that?
That's the consequent encroachment of
Nah.
that breaker,
Nah.
right?
Nah. Not consequent encroachment. It's a reference
Oh, mean
point.
threshold.
That's the mean threshold of that breaker.
Yeah.
Right. Right. So we got 20,391.75. That's the change in state of delivery. We got 20,352.25. That's mean threshold of that breaker. We got 20,372.25. That's consequent encroachment of that bullish fair value gap. Right. So now those are all right. So when that's from when price did this. Right. Those are all the key price levels that you're keeping your eyes on, right? And if price trades to those price points, right? No matter if you entered here or not, like we're gonna say, right? We got somebody that entered on the BISI at 20,402.75. We got somebody that entered on the breaker at 20,392, right? We got somebody who entered on the change in state of delivery on the order block at 20,391.75, and we got somebody who entered in on the propulsion block at 20,377. Right? No matter where you, and then we got somebody sitting on the sideline who haven't entered at all and just waiting. Right? So now, when price went up here and started coming back down and picked you up, and you up, right? Everybody got picked up on this move down right here, right? On this move down right there. Take these out of the way. Boom. So price came back down and picked everybody up, right? Everybody up on that move there. What about all these key levels that we said, right? 20,391, 75, whatever that breaker was, 20,372.25 on the consequent encroachment, 20,352.25 on the mean threshold. What about all of those are you looking for? What are you looking for all of those to act as?
Support.
As support, right? And that's because we are in what?
A buy model.
By
Buy program.
buy program. We're in a buy program. In a buy program, we look for premium PD arrays to be pushed through, and we look for discount PD arrays to act as support, right? Not only do we look for discount PD arrays to act as support, we look for down close candles to act as support, right? So we're looking for the down close candles to act as support as well. So as price comes back down into and picks everybody up, right? Where are the bodies of the candles stopping? You notice where the bodies of the candles are stopping, right? We have mean threshold of this breaker, right? Where are the bodies of the candles? Above that, right?
Mm-hmm.
We got consequent encroachment of the fair value gap. Where are the bodies of the candles? Above that, right?
Mm-hmm.
And then once everybody gets picked up, right? Once everybody get picked up, everybody got picked up, right? What are we looking at here? This the last area where it came down into, right? It dug down into this discount PD array here, right? So all like this candle here totally respected everybody. This candle here respected everything, right? Now, where's at this point right here, let's take this off there. At that point right there, right? That point right there, there are, at this point here, right? There are, right? We got one that we already got annotated, right? One here. There are 1, 2, right? Well, we got one annotated here, 2 annotated here, right? These discount PD arrays that we're looking at, right? So we got one there, right? One there, and that's right of this. Come here, you right there. Right, it was on the wrong thing, right? So that's one there, right? That's the upper quadrant of that order block. That's 2 there, right? That's the opening price of the propulsion block, right? Now, there's 2 more that we don't have marked out at this point right here, right? What are those 2 points that we're going to be watching at this point right here that we want to see price respect on a closing basis? Right? We got 1, we got 2, right? And it's 2 more, right? At this point right here, there's 2 more discount PD arrays that we want to see price respect on a closing basis, right? For this buy program to be intact, show that it's still intact. So I'm going to take a stab at it.
The mean threshold of I guess that the wick over to the left of
If it's a
the
wick, it'd be consequent encroachment, but what
yeah,
wick?
consequent encroachment of the wick on the first down close candle of the bullish order block or propulsion block. Would that be one of
You talk
them?
about here?
That wick?
You talk about here?
There, yeah.
We already traded down to that, right? But let's see. Let's come here. Boop. Boop. See, we just traded down to that right there.
Okay.
Right. So at this point right here, I mean, you're not off. You're not off. You on the right path, looking at the wick. At this point right here.
What about the go over 1, 2 to the 3 candles over to the left? The where you got the consequent encroachment. Keep going. Now go over 3 candles. That wick.
Yeah.
The red candle.
Yeah. Don't. You thinking too hard. You thinking too hard.
I'm thinking too hard.
Yeah,
Okay.
we came down. We right here. Right? We right there, and now price has closed right here. Right? We're looking for discount PD arrays below this price right here that we haven't traded to. Right? This is one of them. This is one of them. Right? Right? Where's the other 2?
Fair value gap?
Hmm?
The fair value gap?
We inside the fair value gap now, right? That's consequent encroachment of fair value gap right now.
What or did
What
we say the mean threshold of the breaker? Did we already call that out?
what we yeah, we the mean threshold of the breaker was over here. Remember
That yeah.
we had the mean threshold of the breaker over here, right? Right? We was over here. Yeah, that's close enough for government work. We didn't hit that, but we wasn't looking at that there. But
Okay.
at this point here, I told you was on the right track with Wix. You're on the right track with
Okay.
Wix, right? So if we said this was one, and we said this was one, right? If this the closing price right here, what's in between this and this that we haven't annotated or traded to? That's the closing price, right? That's one. That's one. What's in between here and here that we haven't annotated or traded to yet? What's in between here? These 2 points right here.
The low, the green candle low.
The green candle low.
Yeah, that's what I said.
We passed that. So the low, the wick of the present candle, right?
There you
Wasn't that
go.
support price?
There you go, right there. That wick right there. What's on this wick right here? We got consequent encroachment and we got a low right there. So
Yeah.
we want to see the bot. This is a discount PD array. This is a discount PD array. We want to see the bodies of the candles respect this right here. Right? At this point, these people still aren't picked up yet. Right? These people still waiting to get picked up. Right? At this point, somebody's in, and now that they're in, they're looking for this to support price on a closing basis. Because remember, their stops is down here. Right? Their stops is down here because they are allowing for price to come where? Down to the propulsion block, right? Down to mean threshold of the propulsion block, right? They're allowing the wicks to do this damage, right? But they want to see the bodies of the candles respect this stuff, right? We want to see the bodies of the candle. The wicks can come do this damage, but we want to see the bodies respect this stuff. Okay? So there's all your points at this point that you're watching for the bodies of the candles to respect. Okay? So we come down, we wick down. See how that wick came down that did that damage? But where did the body close? Above consequent encroachment, above that low, right? And when we came down below this low right here, what did we do? We took out some liquidity, right? We took some liquidity out under that low, right? We came down to an imbalance. If you notice there, right? There's a fair value gap right there. And we came down to our propulsion block, right? And then we came back up and closed well above every last one of our discount PD arrays that we want to support price. Wicks do the damage, bodies tell the story, right? Wicks do the damage, bodies tell the story. Even over here in this area right here, right? When we came down, before we even created this order block there, right? Price is already showing you, right, what it wants to do, because it's not even, it's wicking down, but it's not even staying below like 50% of these candles right here, or this down close candle right there. You see what I'm saying? Right? Price came down and took out the liquidity, right? And once it ripped the liquidity out, see how it wicked down below that, push back up, wick down below that, push back up. Price is showing you, right, that it's not trying to go down lower, right? It's not trying to go down lower, because here's your wick, right? Then we got a clean pass down, clean pass up, right? You can just wipe that out. as a balanced price range, like that never happened, and now price is just looking over there at that wick, right? Consequent encroachment, get gone. It's showing you there that it really doesn't want to go back down, right? But this little move here, right, that was just to, you know what I'm saying, take somebody out. And that's what's this right here? That's 2 4-hour candles, right? That's 2 4-hour candles. So that's like one, like you got one big move down. So that's the end of one 4-hour candle. That's the beginning of another 4-hour candle. But if you was to put that in one candle, that'd be like a candle, a red candle with a real long wick on the bottom. But since it's overlapping into 2 candles, you really can't see it like that. But if we was to like look at it as one candle, right, you will have a red candle of this size,
like an
right
8-hour
here.
chart.
Yeah, with a long wick right there. Yeah, you see what I'm saying? That'll be how that candle looked. That's pretty ugly, but you get the picture, right? So that was just like a little stop hunt right there. That was a little stop hunt right there. And if we look at that as, right, so we go from here. I grabbed the wrong thing. If we was to look at that as like one candle, right? If we looked at that as one candle, right, we didn't even make it to consequent encroachment of that wick, because that would be the open, that would be the close, and we didn't even make it down to consequent encroachment of that wick if we looked at that area there as one candle, right? But that's just rabbit hole type stuff. Okay, so we came down, right, and the bodies of the candles are closing above all of our PD arrays that we want to see act as support. So now you're like, okay, I'm on the right side of the move, right? And then now we're back at current price, right? We're back at current price. And you say, okay, Tim, I didn't get in there, right? I didn't get in there. I didn't get in on any of this right here, right? Now, what can I do to participate, right? Well, you can wait for price to give you another opportunity. Remember what I had to do when I didn't get in when I want to get in here, right? So now, what can you be watching, right? Let's get all of this other stuff out of the way. Get out of here, right? Now, what can you be watching? Because you didn't get an opportunity to participate in any of this, right? What do we have, right, as far as discount PD arrays that we could be watching for price to react off of? For the 4-hour, are there any imbalances below us from where we are right now? Hello. Are there any imbalances?
I see a Civi.
You see a Civi from where price is right now?
Wait a minute. Oh no. You said below price though.
Yes. Mm-hmm.
Yep. Candle one is, let's see where the 4 green candles. Yeah, that second candle. Yeah. Isn't that a Civi? I mean a busy. I'm sorry.
Yeah. So we got a 4-hour fair value gap right there. Okay. So we got a 4-hour fair value gap here. All right. That's the only 4-hour imbalance below us. All right. That's the only 4-hour imbalance below us. Looking here, price had an opportunity to create a busy, right? But we traded back down into this candle, didn't reach this busy, right? So now we got a volume imbalance there, right? We got a volume imbalance here, and we dipped down and we closed up here. So now we're looking at this right here as a possible what? Right? We're looking at this move right here as a possible what?
Busy,
We didn't make a busy.
right?
So we're looking at it. We got a volume imbalance, but we're this move down here. We're looking at that to be a possible what? Starts with an
Immediate
I.
rebalance, maybe.
Yes. We're looking for it to act as an immediate rebalance, right? So if it's going to be an immediate rebalance, we want to see price get away from here. I don't have a 4-hour. I don't have a 4-hour. All right. We want to see price. We want to see price get away from here, right? This candle here, we dipped down and got a nice rejection off of it. So now we want to see at least the next candle trying to get out of here, right? So we got a volume imbalance down there. What else do we have over here that we want to see price react off of so that we can treat this as a breakaway gap? Right? Why do we want this to be treated as a breakaway gap? What would the significance of this being a breakaway gap mean?
That price is really bullish.
That price is really bullish, right? And if we got long right here, we want price to be really bullish. We want to start to see price moving, right? We want to see price moving, right? So if we don't want to see price come back down here, right, we want to see this treated as a breakaway gap on the 4-hour time frame. On this 4-hour time frame right here, right, besides that volume imbalance right there, what other PD arrays are we watching from where price is right now? What's in between here and there?
The wick,
Yes. All right. So we're looking at consequent encroachment of that wick, and we want to see that low protected, right? We don't want to see that low traded to, because we want this to stay strong, right? Can it be traded to? Yes, it can. Where can it go? This right here. If price trades to that volume imbalance, how low can it go? Consequent encroachment of that wick. If price comes to consequent encroachment of that wick, how low could it go? That low right there. If price came to that low right there, how low could it go? That busy right there, right? And if we looking for this to act as a breakaway gap, right, we want to see price stay strong at these areas right here. If price starts to come down, right, we're not panicking if it come down, because we got key references where we know price could realistically trade to, right? So we got these key price points. We got these key price points where we know price could come down to these areas, right? Put this on here. All right. Price could come down to these key areas right here, right? Because these are our discount PD arrays that we want to see act as support. That volume imbalance is really little, so sorry about that, y'all. But we could see these act as support for this right here remaining a breakaway gap, right? Well, Tim, what if it do come down there? Who cares? You're if you're in a position here, right? Your stop is down here somewhere. Remember, we had a stop down there somewhere, and once it traded up there, you may have put your stop there, right? Well, Tim, what if it come and get me? You already put on the risk for the trade. Stop all this right here. Whatever you put on the risk, right? So now you're anticipating this right here to hold up, right? And then once you see price, and if we come to a lower time frame, that's 4 hours, right? That's what you're looking at on the 4-hour time frame, and you would be looking for, because we was talking about how you participate, right? If price starts to come here, right, this is everything it can come down to, right? Even the area you want it to be a breakaway gap, right? But if this holds strong, right? And this remains a breakaway gap that adds to the fact that, hey, we are bullish. So when cause mind you now, we've already traded down, we've already touched that opening price right there of that down close candle, right? And we are respecting that down close candle, right? We're even respecting this down close candle, right? See where these candles closed at. All of these candles there. See where they closed. This last price, we're still respecting this right here, right? So if we get a move up here, right, and we start creating imbalances up this way, right? Now you're looking for reasons to buy, right? As you go up, right? You're looking for reasons to buy as you go up, right? What can you be looking for on a lower time frame, right? On a lower time, let's go down to a 15-minute, right? So now we're in a 15-minute time frame right here, right? So what can we be looking at on a lower time frame? Okay, so now that we're on this 15-minute time frame, right? What can we be looking at? These are the areas where we're looking for a price to be supported on a closing basis on the higher time frame, right? We're looking for this area to be supported on a closing basis on the higher time frame. Okay, so if we look for this area to be supported on a closing basis on a higher time frame, what can we be looking for, right? It's a plethora of stuff that can happen, but just say if price went from where it is now, right? If price went from where it is now and came down, and let's say it swept liquidity here and came back up and closed above there, right? It immediately is going into the manipulation phase, right? Boom, immediately going into the manipulation phase. So you could be looking for something to get long off of on a price leg over here, right? Now, what if price didn't immediately go down and take out these lows, and then on a 4-hour time frame end up closing up there? These 15 minutes, so over 4 hours, you came up there and you closed over here somewhere, right? You've already manipulated out. You could be looking for a reason to get long over there, right? What if price didn't immediately come down and price did something like this? Beautiful, right? What did we just talk about, right? We came up, we took out this buy side, trick people into going long, right? You would just wait for price to come back, manipulate them out, and then get long over here on a lower time frame, right? It's different ways that it can happen, but you already have your narrative. So when you see key levels get engaged with, right? Now, boom, oh, I'm at my anticipatory reactionary point. Now I'm looking for my move, right? If we don't come there and we come up here, take out this, right? And while we going up there to take out that, we're forming more structure. Once we take that out and we come down and give us a raid, now we're ready to go. So it's different ways you can look at how it moves, but it's the same thing. Price is fractal, so you're looking for the opportunities to do stuff, and then we poked above. So we poked above that high right there, right? So we can't. So coming here, we poked above that high right there, right? So we already poked there and forced somebody in, right? So if we got an opportunity, like I said, to come down and drop below these lows, right? Hit that 4-hour fair value gap, even trade below there. And then on a 4-hour basis, we close back up here, right? All we did was force people in, take people out, and now you can look for opportunity to attack that high, right? And then if price wants to dig up here a little bit deeper above there, then I would just be looking for an opportunity to come back below some sell side that was created there, because anybody that had their stops down there, once we trade back above that, they're going to trail their stops, right? Does that make sense to anybody? Did I lose anybody?
This was good.
What's up? What's up, Zay? I see Zay was up in here. I see Zay was up in here. I see, I don't know who that is. It's my time. What's up? It's my time. Oh, you just tapped in. Oh yeah, we at the end. You lucky. You missed all the unnecessary gun flapping. What's up? It's my time. It's my time. Be tapping in a lot. Um, yeah, man. That's it. That's all I got. Hopefully it made sense, man. Hopefully it made sense. But that's just I just want to share that because we sprinting now, man. We sprint gang. We always talk about we sprinting. We can sit up here and we can talk. We can draw all the boxes. We can draw all the fair value gaps and all the breakers and all the. But if we don't understand the narrative of where price trying to go, man, you can. Hey, we trying to make money. You know what I'm saying? We trying to make money. So when you got your analysis in place and you understand where price is trying to go, now you understand, okay, it makes sense for me to, I appreciate that it's my time. It makes sense for me to try to get in now, right? Oh, it's pulling back, but I'm not afraid that it's pulling back because I got my key levels that I'm watching, right? And even with intraday stuff, right? Even with intraday stuff like we was talking about right here, if it start pulling back, right? I'm looking at this 15-minute time frame, and if I see this 15-minute start like dying off like this right here, right? I'm not panicking because I know these are 4-hour levels that I'm watching, right? And if I come down here, right? Let me see here. I got what time is this right here? So 6 o'clock. All right, so from 6 o'clock, right? 6, 7, 8, 9, 10. Over here to 10 o'clock, right? From 6 o'clock to 10 o'clock, right? If this 15 minutes start dying off, right? But then by 10 o'clock, it's closing up here, right? I know these 4-hour levels that I'm watching. So now I can see what these 4-hour levels are doing. And then if my 4-hour levels get below this right here, I got another 4-hour level down here, right? So now if this, just say this 6 to 10 candle, if it does close down here somewhere, right? I'm not panicking. I got another 4-hour level down here. So now just say from 6 to 10, we do close there. Now I'm looking over here. Right? What's the next 4-hour candle? Right? From 10 to 2. Right? Now I'm looking to see where does my 10 to 2 candle close? Right? Just say the 10 to 2 candle still closing the same area there. I'm still not worried. I still got a 4-hour range down here. I got another 4-hour. I got a 2 to 6 4-hour candle. Right? I got a 2 to 6 4-hour candle right here. Right? Now my 2 to 6 4-hour candle, let's say I do trade down here, right? But I close, right, in the same area. I'm still respecting my 4-hour level. You see what I'm saying? I'm still respecting my 4-hour level. Now I can look for price. What is it going to do now? Now we finally traded into this. Now what are we going to do on a 4-hour basis now? If we just hang out here for a long time, I don't care how long we hang out here. Right? Because price is still showing me that it's respecting my levels, my time frame levels, right? And it's the same thing when you go back up to the daily and the weekly and the monthly. You know what I'm saying? When we said here, we look for the weekly time frame, right? For our weekly, God dog, get out of here, line, right? For our weekly time frame, right? We looked here. I don't need none of this no more. Right, for our weekly time frame on our TDA right there, right? What do we say? Okay, we're looking to see for the weekly time frame if this drop down right here was going to be what, right? We looking to see if this weekly drop down is going to be what. Hey Tim, why did you include the wick in the 4-hour fair value gap? And I just deleted it. Talk to me, Deborah. What are we looking for this right here to be? We're looking for this
Support.
to be. No. When we trade it down into that candle, we're looking to see if this will be what? Right? We closed here right there with an opportunity to create a BSC this big. And then this week we traded down into that candle right there. So we're looking to see if this trade down and close back up there would act as what?
Immediate rebalance.
Immediate rebalance. And if it's immediate rebalance, we want to see price on the next week at the latest 2 weeks over get gone from this area, right? So on the weekly time frame, right, what do we have? We got this volume imbalance and we got this consequent encroachment, which lines up beautifully with that daily low, right? You see that? So I'm not going to draw out the consequent encroachment. That day, you see that daily low is right there. The daily low is this daily low is 20,320.75, and the consequent encroachment is 20,319.50. So that's like 1.25 points away. Close enough for government work, right? So that day, this is the weekly levels that we want to see a weekly candle respect on a closing basis, right? So when we come down to our daily time frame, right? So we got Monday, Tuesday, Wednesday, Thursday, Friday, right? To see if we respect the volume imbalance and if we respect this daily low on a closing basis for the entire week, right? So if Monday came down here and closed below that low, who cares on a weekly basis, right? If Tuesday came down here and closed below that low, who cares on a weekly basis, right? If we came all the way down here and took out this low, right? But by Friday, if Friday closes above that low right there or above anywhere above this low, it can be this low or that volume imbalance on a weekly basis, we're still respecting our weekly key levels that we want to see price stay above. Right? Everybody tracking it. It's price fractal. It's fractal. You just got to know the time frames that you're watching and the importance of those PD arrays. I care not what PD array, melt up coming, right? Yeah, that's what we've been talking about the whole time, Zay, about price being bullish, election year, they pumping it up. We've been talking about that we started this morning before I got on live. And I came on live because we was going to start talking about this. And I didn't feel like recording it and editing it and all of that right there. So it's like you have your discount PD arrays that you want to see price respect. And the same way with the intraday time frames, right? If we looking at our weekly time frame, we look on a weekly time frame, we're looking at this right here to be respected. Well, Tim, what if price don't come down there no more? What if this was the drop down and I missed it? Okay, so be it. Price goes up here, right? Takes out that buy side, and on the way going up like this right here, right? When it take that out, right? If it drop below that low, buy it. Right? If it forms a fair value gap and it dropping that fair value gap, buy it. You know what I'm saying? It's the same way. It's like price is fractal. So you know what I'm saying? When you're looking at your weekly time, right? And then you say, okay, I don't want to trade off the weekly, I want to trade off the daily, right? Right? This is our daily chart. We get above that weekly high, right? If it dip back down into a daily fair value gap, buy it, right? If it don't come back down here and it starts creating more structure, it break below that low, buy it, right? Trade into that, buy it, right? Why? Because we're looking at the market maker buy model as being complete up there, and we're looking for reasons to buy. Smart money buys where? Below the lows, right? Smart money buys below the lows. And it's not always going to give you opportunity to get in below the lows. You got to look for the opportunity that is presenting for you. Pump it up. All right. That makes sense, y'all. That makes sense. We cooking with Crisco. Gang. Y'all got anything? Anybody? Deborah, you got anything?
I'm good.
Herf, you got some, Herf? Kashai, the current wick See if the next candle go down to it. Which one, on the
So
daily
you
wick?
also asked a question. I mean, yeah, you asked a question what was gonna
Oh,
happen, so that was my answer. But yeah.
oh, I answered it. Okay. All right. You got anything else?
Oh, I
Say again.
said no, I'm good.
Oh, okay. All right. Anybody in the tube got anything? Nobody in the tube got anything? All right, man. I'll give it a couple seconds. If not, we're gonna go ahead and call it. Again, it's all about where price is trying to go, and don't get faked out of your move. Don't get caught up too zoomed in and lose sight of what the higher time frame is doing. Right? I don't care if your higher time frame is a daily. I don't care if your higher time frame is a weekly. I don't care if your higher time frame is a 4 hour. I don't care if your higher time frame is an hour. Right? Don't get too zoomed in and lose sight. Consequently, 50%. Anything that the easiest way for people who haven't studied ICT concepts to keep up with all these freaking words, just think about 50%. Right? 50% of anything that you're looking at, that's a key point, because there's a million 50%, right? 50% of this range right here is called equilibrium. 50% of a gap is called consequent encroachment. 50% of an order block is called mean threshold. Just think about 50%, right? Whatever range you're looking at, right? If you can't remember what the name of it is, run your fib on it and just look at the 50%. Like this fair value gap right there. If you can't remember, and then you include the volume imbalance too, because it's a volume imbalance there. If you can't remember the name of that, just run your fib and look at the 50%. That's consequent encroachment. If you look at an order block, right? We come over here. If we come over here to this is a huge order block right here, because it's all these consecutive down close candles, right? Just look at the 50%. That's mean threshold. So just look at 50% of whatever range you're looking at, and it's some type of ICT concept. It's either going to be mean threshold, consequent encroachment, equilibrium, event horizon. All of these is just 50% of whatever that range is you're looking at. And that was for SoCal native. Right. So if you ever hear me say consequent encroachment, I'm either talking about 50% of a wick or 50% of a fair value gap. Right. So if you see me looking at a fair value gap, right, and then TradingView make it easy for you, right? Because if you get the rectangle tool and turn on like the middle, right, it's a middle line, right, that's 50%. So you can get the rectangle tool, and if you don't understand how to set up fibs, just get the rectangle tool and run it on something, right? Run it on the fair value gap. That 50%, that's an important spot. That's consequent encroachment. Put the box on that wick right there. That 50% right there, that's consequent encroachment. That's important, right? Put the box on this last down close candle. You're looking at that as your order block. That's 50% there. That's mean threshold, right? If you got two, let's just say this right here was a new week opening gap right there, and this right here was a new day opening gap right there, right? That 50%, that's her event horizon. That's something important. That 50%, that's event horizon. That's an important spot. So it's just 50% of a range. Oh, and then I forgot about the consolidation. If price is consolidating, right, you can go body to body, right? If you believe in the bodies, right, that's equilibrium. That's 50%. If you go wick to wick, run it from wick to wick, that's equilibrium. That's 50%. Equilibrium is 50% of a consolidation. Yep. ICT simplified. ICT simplified. Is somebody on the internet charging you $19.95 for this? All right, man. Hopefully this helped, man. I was bored. I was getting ready to do my weekend chart prep. That's distribution, right? No, distribution is when you it's you can look at distribution a couple ways, right? He got two different ways that he uses distribution, right? One way of distribution is when he's talking about a market maker model, right? If he's talking about a market maker model, when price is going down, it's distributing, and when price is going up, it's accumulating, right? That's one way of distribution, right? So looking at this, right? If you look at this market maker sell model and you look at this market maker buy model, right? When you're on the right side of the market maker sell model, right? You're looking at redistribution over there, right? Right? When you're looking at the left side of the market maker buy model, you're looking at distribution, right? So you got distribution on the left side of a market maker buy model, and you got redistribution on the right side of a market maker sell model. So distributing is going down, accumulating is going up in the sense of a market maker buy model. Now, the other way that he talks about distribution is when you go above or below a high and you're distributing your positions. Like if you got long up here, right, at the top of this market maker sell model, every time you come below a low, you're distributing positions. So the market will make a short-term pop. You come down, distribute some of those long positions, pop. Come down below some lows, distribute some of the positions, market a pop. Come down below the lows, distribute those positions, so the market a pop, right? So that it's like you're when you go below a low or above a high, you're distributing positions, right? So when you're coming back up on the buy side of the model, when you go above the high, you're distributing these short positions that you took here, so the market will drop. You come up, you distribute in short positions, so market will drop. Come up above this, you distribute, the market will drop, right? So it's two different ways you look at distribution. One is in the actual model, and one is when you're offsetting your positions. You're distributing your long or short positions. Make sense? Okay, you said okay. So, you're welcome. Aldo, are you really a giant, or is giant your last name? You really a giant? I ain't never met a giant. I met a big spider. His name was Aranya Grande, but I ain't never met. Okay, Aldo Giant last name. Aldo Giant is the last name. All right, man. Anybody got? I can run my mouth all day, man. Anybody got anything else? Y'all know I sit here and talk all day long. Anybody got anything else? You're welcome, Kashaya. Okay. That's it, man. I appreciate y'all for hanging out. What's tomorrow? Tomorrow is Sunday. That's the third. 1, 2, 3, third Sunday. Who said that?
Me.
Oh, what's up, Kashaya?
I just wanted to, it's like a confidence question, I guess. When we're on live all the time, like I get the answers right and I know what I'm doing about the concepts, but I have trouble when I'm applying it like live. So I wanted to know if you had like advice for how to kind of put it all together, if that makes sense.
Just doing it. Just doing it is going to build your confidence. SoCal Native, the Discord is for the channel members, the people who do the monthly subscription to the channel. It's like a join button down there, and it's got different tiers. The silver is $4.99. That's the silver. I ain't gonna hold you. The silver is just like, if you just want to give money to your boy for what I do, because the silver members, they get as much pop-ups as like just how I be on live with the public. It's just like a stone's throw away from the public. The the um the gold and the black spiders and the mentees, they stay. I got a channel called I Stay Popped Up, and that's where everything happens. So you know what I'm saying? If you want to be in the Discord, I would say go at least to the gold, right? Black Spider is gonna get you like almost everything you want. The mentees get a little bit more because like I do a little bit more with the mentees, but Black Spider, that'll get you everything you need. If you join the mentee, I would say go back and look at the artery and price action playlist, cause the mentees, that's what the mentee stuff started from. You know what I'm saying? Look at, and then we have homework reviews every Wednesday night. Don't nobody do homework no more, cause all the video they done been through all the videos, and I'm sorry, everybody except D. D be doing homework. But it's for the Discord is just for the channel members, and that's just my way of saying thank you to them, letting them have like access to me whenever my mind click on to be like, hey, I want to talk about price action. You know what I'm saying? Now, Kashaya, just doing it, just like I always say, what's going to help you with it is just sitting down watching them candles print. I don't know if you was on there when we first got on. I know it was me and D, but I was like, just looking at that price printing is what's going to help you understand how to apply it. And I think ES is your go-to. Is ES your go-to?
Yeah, it is.
Huh?
I said, yeah, it is.
Okay, so it's like you just want to get used to how does the ES move, like intraday, how does it move weekly, how does it move daily. You want to watch those candles print and understand how it moves. Like it took me a minute to adjust to the NASDAQ because I was always on the NQ. I was always on the ES. And then when I moved to the NASDAQ, I felt like I was out there with Mario Andretti. You know what I'm saying? But once I got used to how the NASDAQ moved, I realized, okay, the NASDAQ retraces deeper. It moves farther. So once I got that understanding of it, because when I first moved to the NASDAQ, I was getting killed because the ES don't retrace as deep as the NASDAQ. You know what I'm saying? It don't do that crazy stuff. But you want to understand how it moves. And so it's the same. It's the same, right? Everything's the same. So just looking at price right here, right? Just looking at price right here. You want to go through and do the same things. Like let's go. What time frames do you look at?
I look at the 15, the hour, the 5, and the 1.
So the 15 hour, 5 and the 1. Okay, so
Also, like for a high time frame, I look at the daily and the 4 hour, but for the most part, 15 minutes.
okay.
And like 5.
Simplify it a little bit. Go 2 time frames apart, right? Go if you look at the 15-5 hour, look at the daily, hour, and 5 minute, right? Daily, hour, and 5 minute. And if the 5 minute ain't giving you clean entries that you like, then look at the 1 minute for your entries, right? So daily, hour, 5 minute. And the reason why I do that is because I've learned because the first person that kind of brought my attention to like 2 time frames was Casper, and he was and I was like, and so I started testing 2 time frames apart, right? And I noticed that on 2 time frames apart, the market maker buy and market maker sell models play out really well, right? So if you go from a daily to an hour to a 5 minute, right? From the daily, that's going to be your higher time frame bias, right? That's going to be like your narrative, your bias. The 1 hour is going to be like your structure, and the 5 minute is going to be like your entry. But that market maker model is going to get clearer and clearer and clearer as you go 2 time frames down. So like if we look at like just this daily candle, right? Let's go to a daily candle, right? one day. Okay, so we're just going to look at this daily candle right here, which was Friday. Right, so we're going to look at this daily candle right here. We'll highlight just this one candle from the beginning to the end of that candle. Right, I'll leave the middle line so we can see the equilibrium of that day. Right, so that's a daily candle. Right, then I go down to 60 minutes. Right, so when I go into 60 minutes, right, this right here is the 60 minutes of that day. Right, that's the 60 minutes of that day. Now you can see how you can see more and more structure inside, like it's starting to come alive. Right, and then when you go to 5 minutes inside that time and you squeeze it up, now how you see how you can see the models inside there with these separate time frames. Like this right here, this would be your entry time frame based off everything you saw. Right, so based off everything you saw for that daily time, right, for that daily time right there. Now let's go back to this day, because that's the day, right, that's the day where that's the last day. Okay, so now let's look at this day here, right, as we're coming into that day. So we're going from there, so now we're going to go straight to 5 minutes, right, go straight to 5 minutes, and this right here was highlighted. That's the prior day. Okay, let me turn all this other stuff off. That's that. Yeah. Okay. All right. So looking at a 5 minute time frame, right? This is the prior day. Okay. This right here was the prior day, right? And looking at the 5 minute time frame, now when we look at this right here on the 5 minute time frame, we see we went up here, right? We dropped down and we dropped down here, right? So once we came down here like that, when price traded back up right there, right, that gave us a break in market structure, right? So now that we got our break in market structure right there, okay, we know that this right here was our smart money reversal, right? Why is that? Because smart money buys below lows, right? This is our smart money reversal right here. Let me just put a line there. Right, now we know that that's our smart money reversal. Okay, let me do this right here. All right, God dog it. Smart money reversal. Put this at the top. Okay, now we know that that's our smart money reversal, right? Because we dipped below the lows, then we came up and we got a break in market structure right there. So we'll mark out our break in market structure right there. I could have swore I had a break in market structure. All right. Bullish break in market structure. Put it on the top. All right, I'm gonna turn that black. Okay. Right, so now based off of yesterday's time, and we're looking at this is our entry time frame, because we looking at it from daily to 1 hour to 5 minutes, right? Daily 1 hour, 5 minute, right? Let's just go to 1 hour, right? So coming to a 1 hour time frame, right? We see that, right? This right here was our smart money reversal, right? And looking at our smart money reversal, right? We traded down into, right, a BISI. Right? We traded down into a BISI on the 1 hour. Right? We traded down to a 1 hour BISI. Right? And then once we got our smart money reversal, that was our break in market structure right there. We have a BISI there, and we have a order block here. Right. All right. So we got a busy there. We got an order block there. Okay. And then bullish order block. Okay. Okay, so this is from the prior day, right? So we traded, we blasted off, right? Remember, price is bullish, right? We blasted off, and then we came back down into the range, right? We came down to this fair value gap right there at the end of this day, and we started consolidating there, right? So we came back down to this fair value gap, and we started consolidating right here. So we start consolidating, and then what do we say is the best way of tech, right? We want to see, right, consolidation, expansion, reversal, retracement, and deliver, right? So if we're looking for consolidation, expansion, reversal, that means we want to see some type of manipulation first, right? So coming in, we're consolidating here. Coming into this day here, we manipulate down. What do we manipulate down to? A 1 hour, which is our structure. Remember, we said your daily gonna be your narrative. So our narrative is bullish, right? On our 1 hour, that's our structure, right? So the first time frame is your narrative, right? Your second time frame, in your case, is the H1, right? That's your structure, right? And then your 2 time frames down would be your 5 minute, right? And that would be your entry, right? So on this 1 hour structure time frame, right, your structure is going to give you your anticipatory reactionary points, right? So if we're consolidating and we're looking for manipulation, right, we want to manipulate down. What ARPs do we have to the downside? We got a bullish fair value gap, right? We want this low to be safe because we're bullish and we don't want to start breaking down. We just want to expand, come back to internal liquidity, right? We took out external liquidity. We want to come back to internal liquidity, right? This was a whole day of trading, right? So now we're consolidating there. We expand down, right? Hitting the ARP, right? And once we hit the ARP, we displace up, right? So we got expansion, right? Consolidation, expansion, reversal, retracement, and now we're looking for the delivery, right? So, and down here is an opportunity to get in with the smart money, right? Because you're getting in on the manipulation leg. And if you miss it down here, once you expand, now you're looking for the retracement to get in on your retracement, right? And you come back to your order block. You come back to your discount PD array, right? Your discount imbalance. I'm sorry, because you come from there up to the high, right? There you have 2 of them down here. So you got that one and you got this one, right? That's your deepest discount PD array is right in line with your order block. We trade down to that one there, right? But it's the same concepts, but when you break it down over less time frames, you have less opportunity to overanalyze it, right? So now on your 5 minute, right, you're just looking for your looking to see if price give you opportunity during your trading times, right? What time of day do you trade?
The New York, like after 9:30.
After 9:30. Okay, after 9:30. So we come to 9:30 here, right? So from 9:30, do you trade the whole day or just up until a certain time?
Because I do options, I just trade like the morning for the most part.
Just so up until 12?
Yeah.
Okay, so up until 12. Okay, here's your 12 o'clock window right there. So in the morning, right, up until 12, since you do options, it's going to be after 9:30. So, all right, so the key times you're going to be looking for opportunities is going to be 9:50 to 10:10, 1050 to 1110, 1150 to 1210. All right. Those are, right? These are the key windows when you're looking for a price to spool or do something, right? You're looking for price to spool and do something during these are the key windows when you're looking for price to spool, right? So this is the time where you're saying, okay, am I in a good position or am I in a bad position? Do I want to cut it or do I want to let it go? Right? So looking at this day right here, right? Looking at this day right here, on this 5-minute time frame, right? On this 5-minute time frame inside the window that you trade, right? Unless you trade right at 9 o'clock, right? Unless you trade right at 9 o'clock, the only time I would have been looking to do something would have been over here during this 1050 macro, right? I would have been looking to do something during this 1050 macro right here, and I would have been aiming for price to get back up to this point right there, which it wouldn't have reached, and then I would have been deciding, do I want to take my profits here because we went above this high, right? Do I want to take my profits on this pullback, or do I want to hold and see where it goes? You see what I'm saying? So, and what I mean by, because price was pretty much trash this day, right? And this is like if you just want to try to make something, because price been trash during the morning. See how it's more cleaner in the afternoon? You see how price is more clean, how it went up, pulled back, went up. You see what I'm saying? It's a little bit cleaner in the afternoon right there, on especially on this run here, than that pullback and that run above that high. But in here, how it's like kind of muddy. Yeah, me don't like it. But this would have been an opportunity there, because looking at this here, we dropped down, hit the order block, right? And like, unless you just trade at 9 right there, that's not an opportunity for me, right? So then we push back up, and we're not creating any type of imbalance anywhere, right? So it's not giving me any type of displacement anywhere where it want to go until we get here, right? So we get this push up, creating a fair value gap there, and when we come into the macro time frame, we come back down into the order block, into the fair value gap there, right? So we come back there, and it's still kind of choppy and dealing with like options, this little back and forth for these 20 minutes that could be detrimental if you're doing same day options. So it's like you really want clean price action, but it's still the same concepts when it comes to what are you looking for, right? So we'll look at it inside this chop, and then we'll look at it outside of the chop. So 5 minutes, when I say a 5-minute not giving you what you want, but and then maybe you can go lower to a 1 minute to see if it give you some type of entries, right? So if we come to this same area on the 1 minute here, right? So during the 1 minute here, this is the time frame, and we come to the 1050 macro right here. When we come to the 1050 macro here, right, it comes down, right? Yes, it traded down into a fair value gap there, but it overshot it. This is really sloppy on here. I wouldn't have been interested in trying to do anything over here, mainly because when we traded up here, right, we didn't take out any type of liquidity, right? We didn't take out no liquidity to the upside. Only thing we did was trade back up into an order block, right? So nothing. We trade above the high right here, right? Nothing, right? And then here we trade above the high there, but then we come back down, right, into the imbalance there, right? So we went below a low, right? Went above the high, and then traded back down into the liquidity, right? So we got us a Judy swing right there. Boom, boom, boom. You see what I'm saying? And it's still the same area. Huh?
At 10:10, or just like just before 10:10, there's a fair value busy there.
Right here?
But you wouldn't be looking to buy because it's outside of the macro time?
No.
Is that why?
I wouldn't be looking to buy here, because like I said, here when we came down here and we pushed back up, We didn't take out any liquidity anywhere. All we did was pull down and retrace back up into this order block right here. You see what I'm saying? Like this move here, we came down below the low and then we pushed back up into an order block. We didn't break no high. We didn't trade above a high. You see what I'm saying? We didn't take out any kind of high. So then we pulled back down into the range again, right? And then when we pushed above the high right here, right, we're still inside this range right there. This is just internal liquidity inside this range right here. You see what I'm saying? We haven't rated. It's like, so when I'm trying to go long or short, right? When I'm trying to go long or short, I want the market to force traders in and then punish them, and then I'm going to get in after it punish them, right? And so let me break it down in the way of what this is saying, right? So here we come down, right, and we take out lows right there, okay, right? So we got people in the market that's want to go low, right? We push back up here, okay, and we don't go above any highs, right? So right now we came to external liquidity, back up to internal liquidity, got an imbalance, got an order block right there, right? So then we drop back down again, okay, and we don't take out no lows, right? And then we push back up right here, right? And we come above this high right there. This high right here, that's just internal liquidity for that range right there. You see what I'm saying? So from this high to that low, this is minor buy side inside this whole range right there. Okay? So when we trade back above that high right there, I'm not interested in that right there. Right? I'm not interested in that right there because only thing we did was take out internal liquidity that's we're still inside this range right here. Right? So now that we traded above this high right there, right? Price comes back down here, right? And it don't take out the low, right? But then we come here and we take out this high, forcing people who want to go long because they see prices not trying to go lower, right? We take out that high and it's forcing people that want to go long because they see prices not taking out lows and the lows look safe, right? And then it comes right back and punishes them, right? So it forced them in, took them out, right? And now when we get a displacement, now I'm looking to go long right there, right? Because this breaker's job is to protect these lows down here, right? Because it forced them in, punished them, and then now this is when I want to join the party, right? That's the same signature we was just talking about before when I said you don't chase it up, you wait for the algorithm to attack their stops and then give you a reason to get in. That's what I was talking about. Force them in, take them back out, immediately go back up, and this is when I'm trying to get in right there. You understand the difference between this fair value gap and this fair value gap? You see what I'm saying?
Yeah, I do. So in this case, would you let's say it was not as close to the macro time as it was in this example, would you still enter if it's outside of the macro time, or that macro window is supposed to, like, once you get in, it's supposed to spool? So you would wait for
with the macro times, right? I'll get in. It's better if you can get in, like going into or coming out of the macro time. Like going into the macro time is a good time to get in, right? And what you want to do with like macro time PD arrays, right? You want to look at important PD arrays. Like if we look like here, let's mark this out here, right? I'm going to mark that out right there, and I'm just going to make this blue. Oh, that's the text. I'm just going to make this blue, right? So we're going to make that blue. Okay. Just make that blue for there, right? And this right here is a PD array from the macro time. That's a BISI from the macro time. Okay. And then we're going to come over here, right? And with this displacement up right there, right? We're going to look at, we got several, right? We can look at the, oh, get on the right candle. Right. So we consolidate here and expand away, right? This is our down close candle that's at or near equilibrium there, because we consolidate in there and we start expanding here, right? This is the expansion right there, right? So we're looking at this down close candle, right? God dog, I took the whole box. Right. Right. So we're looking at that right there, right? And we're looking at that as our, that's an order block inside the macro time, right? So what you want to do with your macro PD arrays, right? When you get to the next macro time, if prices trade in near these, because Michael teaches, my PD arrays don't get stale, right? If prices trade in near these macro PD arrays, right, you're looking for a reaction at the next macro window, right? And then when you're looking at the macro windows, what I like to do, and Michael never taught this, but this is just something that I do, right? I split those macro windows in half, right? Right at the top of the hour, right? And so I look at what price did in the first half of the macro, right? And then I anticipate what it's going to do the second half of the macro. All right. So like in this case right here, when we went into this macro time right here, right, price traded down. And when it traded down here, it didn't engage any liquidity, right? It came down to an imbalance, which is this fair value gap right here, the consequent encroachment of this gap, right? So, and during this time right here, it came down to consequent encroachment of this fair value gap, then it consolidated. And then so in the second half of it, right, I'm anticipating it to either keep consolidating or attack the liquidity. You see what I'm saying? So in this case, it attacked the liquidity, right? It pushed up, but did you get an opportunity to participate? It depends on if you trade order blocks. If you trade order blocks, you got a chance to participate to it attacking the liquidity, right? So if you didn't get an opportunity to participate in it attacking the liquidity, right? When you come back to the next macro time frame, right? We're trading near what? The PD arrays that was created inside the prior macro, right? It can be a fair value gap. It could be an invert. Like if this inversion fair value gap was inside this macro time, right? You would look at that inversion fair value gap too, right? You would look at that inversion fair value gap too. Now, you can argue the fact that you created this inversion fair value gap with the macro price, so you want to use it as a idea of support. But I like for the inversion to be inside the macro, right? Yes, we created it during the macro time, so that gives some importance to it, but I like for it to be inside, right? And if you look here, when you got a lot of stuff going on, like you got an order block, you know what I'm saying? You got all like you even got a order block down here, right? Inside this macro time frame there, right? You got a macro order block right there. So you got this order block. So that fair value gap just outside, I give it to the order block that's inside the macro time frame, right? You got an order block there inside the macro time frame. You got a fair value gap there inside the macro time frame, right? And then if you look here as price in between the macro time frame, right? And if you come here and you split the hour in half, come over here to 10:30, right? When you split the hour in half, see over here we started the price here at 10 o'clock here, right? And we traded up, right? Came down, consolidated, right? And then when we got halfway through the hour, right? Where are we? We down here inside this order block, right? We push up, right there. Remember what I said? We force people in right there. We trade back down and dip below the sell side, respecting what? Mean threshold of that macro time frame right there. Push up, right? And then we come into the macro. What do we come to? Right back to that order block, respecting mean threshold of that order block, right? And then we trade back up over here, hit mean threshold one more time, come up here, respecting consequent encroachment. Once we get back above here, we're respecting consequent encroachment of this reclaim. Now we reclaimed this bullish fair value gap from the prior macro, right? And once we reclaim it, right, bodies of the candles respecting it, dip down to that order block, bodies of the candle respecting the reclaimed bullish fair value gap from the prior macro, and we go up. So that's how I like to use like the macro times, right? I look at the PD arrays that's created in the macro, and if prices trade and near those PD arrays on the next macro, I'm looking at them to support my narrative, right? So and that's why over here I wasn't interested in that fair value gap, because price hadn't tricked nobody in and punished them. I like to see it trick them in, punish them, and then give me a reason to buy. So if we come up here, take this out, take that out, dilly dally up, take that out, take that out. No, I want to see it take them out, dip down, immediately take them out, and then take off like that with some displacement, right? That right there is the signature that I'm looking for. That's what we was talking about early in the stream. Y'all see how stuff always keep rolling back to the same thing all the time with me? I'm using the same stuff over and over and over and over. You see what I'm saying? Do it make sense?
It does. It does make sense.
And it's just doing it. Like, I can say it all day long, but you sitting there watching it happen, and then you predicting it before it happened, and then seeing it happen, that's the only thing that's going to give you the confidence in it. But just that's why I keep asking y'all, what is this? What do you see here? What is this? And y'all notice I be talking about the same thing, and then you be like, oh yeah, the wick. Oh yeah, this. Oh yeah, that. You know what I'm saying? I be talking about the same thing over and over and over. That's why you keep going back to the same stuff. Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. You know what I'm saying? And every time I be like, what we in a buy what? Buy model? No, a buy. Oh yeah, buy program. We already said we was in the buy model a long time ago. So now we zoomed in. We want to see if the buy program is intact. We said we was in a sell model a long time ago. Now that we zoomed in, we want to see if the sell model is intact. Right? If the sell model is intact, you want to see these premium wicks acting as resistance. Right? You want to see these up close candles acting as resistance. You want to see these premium fair value gaps acting as resistance. You want to, if you were to buy models intact, you want to see these discount wicks acting as support. You want to see these down close candles acting as support. You want to see if it's created during a macro time frame. If you're trading back over there, you want to wait. If you're bullish and we're over here and we're trading below some PD arrays that was created in this macro time frame, you want to see price give you some kind of momentum to the upside to reclaim that fair value gap, to reclaim this order block, to get back on the top side of these bullish PD arrays, and then enter on some type of support off of those because they was created in a macro time, and look for it to spool towards some type of liquidity, right? How we came in here, what do? We spooled down toward these imbalances, right? And then once we hit them imbalances, then we took off above the liquidity, right? And I like to split it in half. I like to split the hours in half. I like to split the 50%. Everything is 50%, right? Like, this is just the way I trade. Everything is 25, 50, 75, $1. Like, you know what I'm saying? Everything is broke. I break everything down into quarters, times, PD arrays, everything. And I just like to look at the 50% of everything, right? What do we do in this half? Okay, what do you give me in this half? Did you give me anything? You really ain't give me nothing. I like to trade imbalances. Okay, I like to, if it's no raid, no trade. Oh, we forced them in. Oh, we raided. Okay, now I'm looking for a trade, right? Am I looking for a trade here? Did it give it to me? Coming to the macro time. There you go. Bingo. Yahtzee. Do that make sense, Kashaya? And everybody else that's listening. I was talking to Kashaya, but everybody else, y'all just got an opportunity to look over my shoulder.
Yeah, it does. Thank you. You gave me like a lot of aha moments just now. So like since you put like all the concepts together and like you gave me structure as well because you said the hourly since I was doing a lot of time frames, I see now it's doing too much. So
Yeah.
like just the day, the hour, and the 5, and like you said, sometimes the 1 minute, it'll help me when I'm practicing. So thank you.
Yes. That's good. We all about the aha moments, man. That's what we want. Them aha moments. My aha moments.
Especially the smart money reversal part. That was like the first one. I was just like, oh, okay, that makes sense. I see it.
Yes. Yes. That's good, man. Y'all clap it up for Kashaya with aha moments, man. With the aha moments, man. But yeah, no matter how much I sit here and say it, until you start watching them candles print, until you start calling it for yourself, it you still gonna struggle with it. You know what I'm saying? It's gonna take you doing it yourself and seeing it play out. And then what's gonna teach you the most is when you do it yourself and it don't quite play out and you take the time to go back and see what you miss. Man, you talk about aha moments. Man, it's gonna be like, whoa. You're gonna be like, now I freaking get it. Now I get it. It's like when you come in and you anticipate this to do something, and then it fails, and then you go back later and be like, oh, I was supposed to wait until here to try to buy off of that. Because Michael always say we cut through candles, right? And if you had no knowledge that this fair value gap was created during a specific time when the algorithm is programmed to do something, and then we trade it back to it during another specific time when the algorithm is programmed to do something, you would never think to look all the way back over here to this 1007 candle as an entry for this 1105 candle right here, because you would be looking at all of this as, oh, we done did too much. But since you know this is a macro window when the algorithm is programmed to look for imbalance or liquidity, and then when you look over here and this is a macro window when the algorithm is programmed to look for imbalance or liquidity, right? Then you see that if you take this fair value, I'm going to make a new color, right? We're going to make this yellow. No, that's not right. We're going to make this yellow. No, let's do another color. Let's make it that's good enough, right? When I start stretching this through right here, right? When I come right over here and get inside this macro window right there, what do you see right here? What is that right there? You see that? That is a SIBI, right? That's a SIBI. That's inside this macro time frame, right? Where was that SIBI created? That SIBI was created inside this BISI right here, right? What do they call that? They call that confluence, right? They call that confluence. So you have the confluence of a reclaimed bullish fair value gap with an inversion bearish fair value gap, one created during this macro time, one created during this macro time, and then price trades down to them, hits the order block that's created during the macro time, right? This order block right here, where is it? It's inside this order block right here that's during the macro time. What did price do when it touched that? Boom, bounced off it. Where did price close? Right at the high of that reclaimed bullish fair value gap from that macro time. And then price left there, right? But if you have no concept of when price is going to do what it does, right? You have no, even inside this gobbledygook, right? You can still see how the algorithm is doing very specific stuff. But that's why I like to understand all of the concepts so that I can engage with the market educatedly, This is what, when y'all hear me say, when you know what price is trying to do and you know the signatures that is leaving, you can engage with the market educatedly. This is what I'm talking about here. We sprinting, y'all. You have to get on the field and trading. You can't just be yeah, you got to get on the field. You got to actually do it. Doing it is what's going to make you build your confidence. Doing it. Hey, how about my son, man? How about my son? Did y'all see the video of my son that I've shared in the Discord? Did y'all see that video?
Yes, sir.
Man, my son, hey boy, proud papa moment. And that's my father-in-law with Christopher. Christopher played the clarinet. Right there. That's his clarinet in his hand. He in the marching band, and then that's Junior right there. My father-in-law came over. Look at this lady out there. Look at what I just noticed her. What are you doing? Hey, Becky. What Becky doing, y'all? Becky in the background lurking. But yeah, he drove over here 4 hours yesterday just to come to Timothy game last night. He got here like maybe 45 minutes before the game started. And he showed up, man. Timothy did his 1-2, man. I shared one video. My little brother was like, "Did Timothy get in time?" I said, "Yeah." And I sent one. The one that I posted here, that was the one that I sent to my little brother. Right? Boy, it went crazy. Number 15 right there watching. Hang out. Come here, boy. That was one of the tackles he made. He went beast mode last night. His granddaddy was there. His auntie was there. His girlfriend was there. Oh, that boy went crazy. That boy went crazy. He had everybody was there watching too. Man, that boy went crazy. I said, okay. And it was homecoming. But anyway, that's the end of my proud papa moment. Y'all know I'm a proud papa, boy. Don't get me talking about my kids. Hey, man, I appreciate y'all tapping in. It's 3:33. We done been on here for 2 hours. I know ain't nobody gonna go back and watch this video. But so I hope y'all picked up on some gems, right? I think all hearts and minds are clear. I think everybody good. I think all the questions have been asked. All the people, all the non-gang members. Yes, you're welcome, Kashaya. All the non-gang members, I saw people asking questions like Al Giant. I don't know if he's still here. SoCal. Oh yeah. It say gracias el grande spada. It's Aranya Grande. Aranya Grande. All right, you welcome, man. That's it. 80. I saw 80 popped up. You know what I'm saying? But yeah, man. Homie Zay came. Irma was up in here. All of the gang was in here. Call Me True. I ain't seen Call Me True. Wait a minute. I know that name. What's Call Me True? What's Call Me True Discord name? Call Me True. What's your Discord name? Yvette. Yeah. Yvette up in here. Who else up? Yeah. Hey, man, I appreciate y'all tapping in, man. Hopefully a lot of people got aha moments. Tomorrow is the third Sunday. So that's Black Spiders and the Mentees. Y'all pull up with your hard-hitting questions at 7 p.m. If y'all don't pull up with no hard-hitting questions, y'all know I'm gonna cut it short. Now y'all gonna be like, "Well, Tim, you done told us everything yesterday. I ain't got no more questions, man." And then Monday is gonna be tape reading for everybody at 9:00. Since I didn't get a chance to do something. Something happened. I don't know, something happened, but Monday gonna be tape reading for everybody at 9:00 in the morning. So Black Spiders and Mentees, pull up with your hard-hitting questions tomorrow night at 7. And everybody, it's gonna be a public tape reading session for everybody. Was it the holiday? Yeah, I think it was. Something happened and something happened. But anyway, pull up. If you're not in the gang, or if you're not a Black Spider or a Mentee, put indigenous people, pull up on Monday at 9:00. We're gonna do free tape reading. And then yeah, man. Till the next time I decide to get on Al Gore's internet, it's been your boy, Aranya Grande, aka
Thanks, Sam.
You're Welcome, aka Big Spider. Y'all be safe out here in these trading streets, man. I'm gone. Uh-oh, I ain't got my what's the name up there? Yeah. I don't know why my stuff ain't. I don't know why my stuff ain't working. Oh, wait a minute now. Did I? What happened to my? The whole. I see I'm still on there, but the whole. What's the name? Gone. There it is. It's back now.